G'day guys, welcome to another episode of the Pumped on Property Show with Ben and Simon. Now I do feel like I'm a broken record at the moment, but this is by far the best podcast that we've ever done, in my opinion.
Look, practice makes perfect. We've been doing this for a while now, but obviously it's one of our favorite topics and it gets me so excited, but also a little bit nervous about what's to come. And it's really nice to have a deep dive into some of the things that we're doing to get prepared and get ready for this financial opportunity.
You know, we're not just talking in this one about the financial stuff we're doing, although we do speak to that, but we're talking about the mental stuff that we're doing, the physical stuff that we're doing, and how we're going to try and move through this period that's going to be a little bit shaky for a lot of people in the world in a super positive way. Like, opportunity is generally found in times when most people don't see it. And so getting ready for the opportunity that's coming, as well as taking advantage of it when it does, or not, is sort of what we talk about in today's app. But I really love this one with you, bro. Like, thank you so much.
Let's dive in.
I got a text message from one of our clients, Magella, in the last week, and she's like, Ben, I'm vibing on the content at the moment, but these titles are freaking me the fuck out.
Ben's been watching too much Zoac and getting these real clickbaity titles. The algorithm's the algorithm. We've got to make it work for us sometimes.
Yeah, plus also I want people to know what's coming.
Absolutely.
And the only way that they're going to know what's coming is actually, you know, it is going to be rough. Like, it's going to be rough at some point in the next 2 to 5 years. We are going to be in the worst financial market since the GFC. And no matter which way you want to say that, that's the reality of what's going to happen based on hundreds of years of history.
And rather than burying your head in the sand and, thinking that ignorance is bliss, it's like the world's full of uncertainty. And if we can understand history at a really deep level to try and eliminate some of that uncertainty and try and give us a little bit of an understanding as to what's to come next, because awareness is the first step to overcoming any challenges. And this environment, when it does come around, will feel challenging, but it won't feel as challenging if you've got that awareness and if you've got that, I guess, proactive approach, which is what we're trying to bring to everyone.
You know, I just want to talk about the past for a second, like looking back to remember the future, because we can't predict the future, but we can look back and see what's happened. So if you had been following our stuff sort of 18 months to 24 months before the mid-cycle slowdown, which we talked about, most likely thing that was going to happen in all of our content was the property market was going to come off by 10 to 15%, which it did in Sydney, Melbourne and Brisbane. It went backwards for about 18 months. And we said that the stocks based on history would drop by somewhere between 30 and 50%, which they did. Now, I got hundreds of emails and text messages after that from people that we'd worked with and people that had just seen the content and done something about it. People made a fortune. Like, my accountant at the time borrowed all of the money, and I'm not recommending this. He was the accountant and he's a stock trader, took every single dollar that he could out of his home and put it in the stock market and made $1 million cash in like 3 months. So it can be a phenomenal opportunity. And then in the last GFC, if you look at the history, places in Noosa that are now worth 5 mil were being sold by the bank as mortgage and possessions, 1 out of 3 of them for 600K. Stocks at that time dropped between 40 to 70% depending on the stocks. And so this is very, very scary, I suppose, for some people to think about, like, these sorts of declines. And they're very, very market and product specific. And if you're right up there at the age of retiring imminently, then I think it's absolutely time to go and talk to your financial advisors and accountants, and most likely they're going to have zero idea about this. So you should actually go to the experts like Phil Anderson, who wrote The Secret Life of Real Estate and Banking, or Akil Patel, who wrote The Secret Wealth Advantage. The Secret Wealth Advantage is just so much easier to digest for me, and has a very, very clear indication of the different stages of the cycle. But imagine a world where in 2 to 5 years from today, you could buy an Apple stock or a Tesla stock or a Disney stock or a Toyota stock for literally 50 cents in the dollar, knowing that in most cycles they do 200% after they come back.
It sounds like such an opportunity, and who wouldn't want to obviously take advantage of that when it does come. And I think something else that we were talking about that's important to mention, because it will, I guess, give a bit more context to what's to come as well, is we were indicating at the time that, you know, Melbourne and Sydney and Canberra to an extent and Hobart to an extent have already seen a great run up in the first half of the real estate cycle. They were Australia's top performing capital cities. And in the second half of the cycle, we were sort of indicating that they may not be the best areas to look at. You want to be focusing your attention to Queensland, WA, South Australia, but more importantly, Brisbane, Perth, and Adelaide. Hindsight's 2020, but we were talking about these markets being the best opportunities back in 2018, 2019, 2020. And now that we've got some hindsight, we've got 5 years of proof to suggest that these were the top performing markets as well. So,
And we weren't just picking those out of the air.
No.
It was based on me obsessively sitting down with Phil Anderson and you and I looking at so much data and then going, hang on, like Sydney in the 9 years before it went absolutely nuts in sort of 2015 through to 2020, had done less than 1% per annum for the 9 years leading up to that.
that's it.
WA or Perth before it just went absolutely ballistic had been on flat for almost 12 years. Brisbane before it went ballistic had only done 1% a year for the 11 years. So it's not like we're just going, hey, this looks good, speculate. It's the 10-year averages are the truth. And I think there's one or two markets in Australia that very, very much stand out right now to me. Brisbane with the Olympics coming up and Melbourne just looking statistically at a 30-year low between Sydney and Melbourne right now.
So they're looking statistically undervalued, but then once again, if you look back at history, at these periods of time where we are coming into the winner's curse and then the potential recession, you know, history suggests, like the last 2 cycles, that Melbourne and Brisbane have been the safest markets over that period of time. And if you look at, you know, what happened in Melbourne from 2007 to 2011, it actually went up by over 40%. And over that same period of time, Brisbane went up by over 30% as well. So all we're trying to do is keep ourselves safe, keep our family safe, keep every single one of our clients safe, and anybody that's willing to sit through some of these podcasts.
Yeah, without a doubt. And I liked what you said at the start. Like, I don't think burying my head in the sand, and I've done plenty of that in my life. Like, I've done plenty of not wanting to accept the reality as it is. And it just doesn't serve me, especially now that I'm 40. I've got 3 children, and each time that I'm at work, and I love work, like it's purposeful, it's service for me, but I like hanging out with my kids more. And I like traveling, and I like spending time with my friends, and I like surfing, and I like playing soccer, and I love training. And so it's one of those things that's like each time we're trading time away from our families to earn money, it has to be meaningful. And then if we're investing that money, like so many people listening to this are, then we want to protect those investments. And as Warren Buffett says, build a moat around them. Now, things are going to go up and down, and we take a 15 to 30-year approach to everything we're doing. But if I can protect my downside risk a bit by investing in better markets over the next few years than the ones that have already been fully rinsed by investors around Australia, we're doing good work. And, you know, what Simon and I did in prep for this was write down how we're personally preparing a little bit, because after our last one that we did on the coming GFC, I literally got 20 odd text messages
Yeah,
and
me
calls
too.
saying, what are you physically doing yourself? And that's
Yeah.
why we're sort of doing this one so close. But we swapped notebooks so that I could ask you a bit more about what you prepared and vice versa. You said the first thing you're doing to prepare is learning. What are you sort of doing for that specifically?
So the first thing is just reading or listening to, preferably reading and highlighting and studying the books that we've referred to. So the Secret Wealth Advantage by Akil Patel and The Secret Life of Real Estate and Banking from Phil Anderson. So like these 2 books outline the cycle in the most modern way. Whilst there's plenty of books that have talked about these cycles in the past, these are the newest and most relevant versions of. So they've got new information based on the current reality that we find ourselves in. Like even The Secret Wealth Advantage goes right into crypto, which is like a brand new phenomenon as well. And it only came into existence at the beginning of this current cycle.
And they're as prescriptive as in this 2-year window,
Yes.
stocks, crypto, commodities, property, business, this is what you should be doing. Should you be leveraging up on this asset class right now? How has this asset class performed over the last 200 years? What's most likely going to happen in this 2-year window? Like, it is goosebumpy, like
It is.
so prescriptively good.
Yeah. And I also listen to every single YouTube video that they produce. So I pay for their subscription. So they've got a company called Property Share Market Economics. Every month or two, they do a online seminar that's only for people that are subscribed and pay for their services. They also do an email. So they've got an email from Darren Wilson every single week. Akil and Phil do one email every month roughly, and they basically just outline in real time where we are, what's happening, and are things still on track. So it's like listening to them present in real time as new information comes up, and then just understanding the history. So, you know, when they're talking about previous cycles and what's occurred and why they believe that that particular area of their economy is going to be better, you know, trying to look back at history and get that evidence myself, because I'm still a cautious skeptic. Like, I was pretty young in 2008. I was, 16 years of age in 2008. So, you know, I don't have any sort of living memory of what it felt like at that point in time. And so just like going back to stack that evidence for myself. So it's just diving into it. You know, I know a lot of people obviously hear these types of podcasts, but then they may have not gone out and bought the book yet. They may have not gone and subscribed to Property Share Market Economics. So it's like the first step to overcoming those fears is actually to learn about the history, learn about the cycle, learn about all the information that's out there. And, you know, that's sort of the first thing that I'm doing, which is actually an interesting segue into what you wrote down, which is like, I'm just trying not to stress. And it's like for me, like, I find that pretty difficult. Like, it does bring up some uncomfortable feelings.
Yeah.
Because as you said, like, we don't work so hard to lose it. We want to protect ourselves, and, you know, thinking that my assets could potentially go down in value, that does make me stress out a little bit. Like, how do we avoid that?
Oh, if you can tell me, like, let me know, bro. I got no idea. Like, I am an anxious dude by nature. I actually think it's a sort of a superpower as well, because you're more aware of these things. Like, if I wasn't like this, I never would have stumbled at 2 o'clock in the morning 8 years ago or 7 years ago on Phil's work. So I'm grateful for my own nature, but that nature is no longer serving me as I'm getting older. It's no longer serving me in business, for my clients, for my family, for my wife. And so in terms of not stressing, there's a day and a night. There's a summer, winter, autumn, spring. There is a financial season. Sometimes that season is easy money and we get booms. Sometimes it's very, very challenging season where the money is pulled out of the market and there's fear in the market, and it's a winter. And we are in summer right now. And I really want people to get this. Like, crypto, as we're recording this, is at all-time highs. Gold is at all-time highs. Silver's about to go through a run. A lot of other commodities are going off. The AI stocks have just completely broken away from the wider stock market and are going on an absolute tear. Property prices in a whole bunch of suburbs we're buying are going up 10 to 25 grand a month. Some of them are flat too.
It's interesting, though, that you say this, but then each month we track the sentiment readings, and sentiment's still at really,
So
really,
low.
really low levels. So it's like the real data is showing that the economy is in this bull market, but then
Assets are in a bull market. The economy, and Phil said this, did you read that?
not yet.
Phil said, sorry to interrupt you there,
No, that's
but
good.
Phil said for the rest of the cycle in the winner's curse, this is the real economy. It's flat right now and actually declining. The cracks are already there, but assets, especially the speculative ones where people don't really know what they're doing.
Like crypto.
Yeah, like everyone's like, there's this beautiful 4-year cycle. And it's like, what the fuck are you talking about? Like, yeah, there is, because but what did it do in COVID? What
Yeah.
did it do in the mid-cycle slowdown? Exactly the same as the stock market. So it's so new, and the majority of people in it aren't reading this stuff, aren't thinking about this stuff, and it's speculation. Same with the AI stocks. And so it's just he said that there'll be a monster breakaway in the new thing, and there is at the end of every cycle. In every cycle, there's a new thing, like the dot-com boom and crash, for example, that just artificially spikes. In previous cycles, it was things like the car, it was things like trains, it was things like electricity, but there's always some new technological boom. Right now, it's crypto and AI that just gets. I'm the biggest idiot of all time by not getting into it so much earlier. You did.
Yeah,
Almost all of our
not
clients did.
not enough, but everyone always says that. That's a pretty common denominator for every investor.
Like, I'm the dumbass because 7 years ago, they're like, there's going to be this new tech. And for the last 10 years, our friends have known about it and they've been buying it. And it's just the case of like, all right, like, dummy, next time you know that this is how it works, look out for that new shiny thing.
If it takes a 50% bath, there'll be a good opportunity.
But the real economy is flat and declining, and the artificial economy, as Phil calls it, which is the speculative one, is going to rev off its head.
Yeah.
So yeah, we'll see some markets do extremely well, and we're seeing other markets going flat right now, and that's very, very, very much the case in Australia already for the higher value assets. Like, everything over 2 mil is starting to sit flat unless it's a very, very, very particular suburb right now.
Interesting. And it'd be interesting to see, when we actually see a top and then start to decline. And it'll actually be interesting to see what leads that as well, because in the past it's been those real estate investment trusts. But now, and the difference between, 2026, 2027 versus 2007, 2008 is, the world is there's so much more noise these days. Like, with social media, people get their information, their news so much quicker than we used to just, 17, 18 years ago. So I'm intrigued to see if that sort of speeds up some of the information that comes through across the globe as well, because Australia's always been about 6 to 12 months delayed behind the United States, and the United States has always led it. But it'll be really interesting to sort of see how this
So true.
unfolds. And, the
How
only
quickly
reason
the fear spreads, right?
exactly how quick this fear spreads and how quick people get out. Like, obviously, you just got to keep your finger on the pulse and start following these things so that you've got that awareness. And then obviously you want to be in the best possible position. So, like, next thing that you had written down is, financially having a big picture, a longer term plan. So it's like, what are you doing financially to get yourself ready?
The first thing I'm doing is, I know this is not going to be well received, but I honestly don't care what happens year to year
Mm,
because I'm investing for the next 15,
mm,
20 to 30 years.
mm.
So when you're taking a longer term approach, in 3 occasions, literally in the last 10 years as an investor, I've seen the market go down in Sydney, Melbourne, or Brisbane by 12 to 15% for a period of time. And then it comes back around. I've seen the stock market decline between 10 to 50% 7 times in the last 12 years. Like, what does it matter if you're not selling the asset in that year? Because we know that historically in Australia, house prices have gone up, around about, what, 8.2% according to Simon Priestley over the last 50 years. When you look at the long-term return of the ASX or the S&P, like the index markets in America or Australia, they're talking between like 8 or 7 to 11 or maybe even more percent per annum for the last 100 years, depending on the source. Like, it's with a long-term approach, all of the noise and turbulence will be taken
And
through.
that's what Tony Robbins outlined in his book Money Master the Game and Unshakable. Basically, after interviewing the wealthiest and most successful investors in the world, they all believe in just the buy and hold. The time in the market is the most important aspect. Timing the market is really damn difficult. And at this stage, as we get close to the end, people are very speculative and they're all looking to get rich quick. They're all looking for the short term cash. But you're so right. If you start thinking in decades, 10, 20 years, it's all going to be washed out. There's going to be many
Booms
dips.
and busts.
Exactly. So you just got to hold through those good times and, acquire good quality assets that have got those underlying fundamentals.
Yeah, 100% agree. Like, financially, I'm doing simple things. So one thing that I didn't want, because I don't have much super, like, because I've worked for myself for the last 10 years, I didn't put money in super until about 3 years ago. Um, And I don't want that small amount of funds that I have to take a 50% hit. So the advice that I've got from my accountant is I've now set up a self-managed super fund. The only reason I did that wasn't to protect my, small amount of stocks going down by 50%. It was more just because I've got enough money to go buy a property. I want to go buy a property in Melbourne. The reason I want to buy Melbourne is because of the history. It did extremely well. In fact, it was the top performing market in Australia in the last GFC. But more than that, and I couldn't care about that at all because history doesn't always repeat. It's just the cheapest capital city on the east coast of Australia that I want to own. And so there's that. With my properties, I'm selling 2 investments right now, and I've sold another one. I wanted to do a huge asterisk to that. I'm not selling them because of what's coming. I'm selling them because I just bought a slightly more expensive home, and I don't want to be going into this thing with a lot of debt
On your own home.
on my own home. So I want to be wiping out some of that debt. Plus the 2 properties that I'm selling have literally doubled in value since COVID when I got them. And so I'm kind of like, well, they'll continue to do well, but I can't see them going from 1.2 or 1.5 million dollars to 3 mil in the next 10 years. And so I just want to get that money working for me in a different market. Um, I've gone interest only again on all my properties, and I actually just refinanced and reset all my loans back out to 30 years. An accountant or financial advisor would be saying, what are you selling quality assets for and paying the capital gains? Why would you be buying new assets and paying the entry costs? Why would you be resetting loans to 30 years and paying significantly more interest on it? And why would you be going offset accounts instead of principal and interest? All of that is about capital preservation. People don't realize how dark it can get for 24 to 48 months in a GFC. Capital preservation and reducing your living costs as much as possible is the way to not just survive these events, but thrive through them. So I'm doing all of those things, even though every advisor in Australia and accountant would be like, you're a dumbass. And I'm certainly not saying other people should do this, but for me, I want my week to week costs to be as low as possible so that I've got as much money to pump into Disney or Apple or Tesla when it's 50 cents in the dollar, or to go and buy that place in Noosa if it does crash again for literally a third of the price that it's worth today.
It's a once in a 20-year opportunity, and spring chicken anymore. You're 40 years
Exactly.
of age, you've probably only got one more full cycle in front of yourself, and you want to make sure that if history does repeat, and as you said before, there's no guarantees, that's something that I talked about, you want to be in a position where you can absolutely capitalize, because you don't want to be the bloke in a few years being like, I knew. Like we both talk about, like
Oh man.
we both missed out on Perth and we knew it. We both missed out on Townsville and we knew it. And now we're looking at the writing on the wall. We've spent over 7 years deeply studying this stuff. Like we don't want to be the guys that sort of end up having to say, I could have, I should have, but I didn't.
Yeah, about 4 years ago, I was going through a super anxious stage of trying to like control. And I'm like, control comes in funny forms. And a lot of control for me comes in trying to plan the future and trying to learn from the past. So I created a spreadsheet where I looked at property in America, Australia, and Europe over 110 as far back as I could. And then I did the same thing for stocks in all of the major markets, Asian, European, American, and Australian. Same for all of the major commodities. And what I was trying to do is then overlay the 18.6 year real estate cycle and try and get a gauge looking at charts of what runs when. And this is in relation to what you just said. You and I both know and both knew when the sunny coast, the Gold Coast, Brisbane was going to run, when Perth was going to run, when Adelaide was going to run. I knew that those stocks were going to halve and then double. I knew that gold was going to double in the last 2 years, and I did nothing about any of them except for buying Brisbane property. And I don't want to be super wealthy. I just want an extremely small number of properties. But as I'm getting older, I'm also trading my future life by not taking action. And I like in terms of what you said at the very start, I'm not going to put my head in the sand and miss this once in a 20-year opportunity because it doesn't get better than this.
And the funny thing is, like, we talk about all the mistakes that we've made over the years. And yes, there's been lessons that we've learned from experience, but the biggest mistakes that we've both made is through inaction.
Inaction, 100%. So you mentioned something, taking your own advice. Like, what were you sort of referring to there?
Like, I'm an emotional guy. I try and wear my heart on my sleeve, and, what you see is what you get, on camera, off camera, in business, outside of business. Like, I just am an authentic person. And so with that, like, I'm a human being. I get excited. I'm an investor. I see my friends, my family, my clients all doing amazing things, and
Doing stuff.
and doing stuff. And I get FOMO. I get this like fear of missing out, and I get a little bit envious. I'm like, oh, I'm jealous that these people are doing these things, and it is really just keeping my emotions in check and taking my own advice. Because, like, an example is a few months ago, me and my wife, for the last 5 years, we live in a beautiful house, in a beautiful street, in a beautiful suburb, in a beautiful area. But there's a nicer street in the same area, and we call it the Manifest Walk. And we kind of walk up the hill, walk down the street, and we look at properties. And there's only a few houses on that street that we're like, this is the dream. And one of those houses came up for sale, and it wasn't the right time for us. We weren't in a financial position to do it. We would have had to sell down so many of our assets to be in a financial position to purchase it. But I was getting so emotional, and I'm like, oh, but this might be the only opportunity that the property comes up. I've got to go for it. And I got so emotional. I got so committed to doing it. I did a lot of research and due diligence. I was so close to making the decision.
You had an offer on it, didn't you?
I never physically put an offer.
Okay.
I was entertaining the idea, but it would have needed to be subject to sale. And, there was a lot of moving parts, but, just sort of taking a bit of a step back and just going, okay, well, if this was like you sitting opposite me telling me that you're about to do the same thing, or Crystal, or one of my best friends, or one of my clients, I would just take that emotion out of the equation and give them the advice based on what I know, which is a small amount, but at the same time, just starting to, like, drink my own Kool-Aid, I guess, and being like, cool, well, I've got a strategy in place, and that's the next thing that is in alignment with taking my own advice, is sticking to my strategy and not making a change because of some emotional reason. Oh, my mates are killing it in crypto, I should get some. Oh, my brother's setting up a self-managed super fund to buy a property, I should be doing that as well. And just like taking stock of my own life and where I'm at this stage of my life, because we're all on our own little journeys, and we've all got our own goals and our own values, and just like not necessarily comparing or being jealous about what other people are doing, and just going, okay, cool, like, I'm on my own journey. I've got my own strategy. Let's just focus on that and don't make any stupid emotional decisions that could take you a few steps backwards.
Dude, I love hearing that. And it's so difficult because the society that we're in is set up, especially with social and stuff now, to artificially create that. And you and I are both lucky that, like, that's something that affects us all. But also, like, we are created as individuals. We're created to serve and have purpose in different things, where everything is happening at the right time and in its own time. And it's very, very difficult to just separate the FOMO. Like, I've been catching up with a few people. I was just in New Zealand with one of my good friends, James, who's also a past client of ours, and our families went over together, and he's like got so much crypto and had so much crypto, and every day he's opening up his wallet with all these different things that are going ballistic at the moment, obviously. And I was just like,
he just got himself another few years of retirement
100%.
in like 2 weeks.
Yeah, like, it's like watching certain things go up like 300% in a day, like and watching how into it he was, and like the dopamine hits of like, I just woke up 100 grand better off today, and I'm like, bro, this is so fun to be like observing, and that FOMO in me fully kicked in too. It's like I had friends that were like right into it that were like,
One of
just
your
buy
friends is
100K
earliest
coins.
adopters that you could get.
Yeah, he was getting like that stuff when it was 20 cents, like Bitcoin. And I just look now and I'm like, I can't be everything to everyone. And I read this great book overseas. It was called Die with Zero. Just as scary a title as this. The concept, because I skim read a lot of it, because a lot of it was just not for me, is just focus on your values, focus on experiences. You can create wealth, and that wealth, to give it to your kids when they're 60 is just such a waste when they don't need it. Like he talked about bringing it forward and helping them get that first home in their like mid to late 20s once they know what they're doing, and to maybe pay off their home for them in their early 30s, and to give them the gift when they need it. And it kind of really changed my mindset on why I'm still investing is something that I've been thinking about. Like it's like I started investing because I had a chip on my shoulder. I wanted to prove something, and I wanted to be valuable as a 20-year-old. And then in my 30s, having 3 young kids, it became about setting up my family. And then at some point it just became, this is what I do. And then at some point it was like, I'm earning more money. I've got more money. I'm just going to keep investing. But a lot of that was unconscious investing. And now it's more like,
Yeah.
I don't need anything more than I've got. So why am I going to continue to do it? And I've realized like I'm so into, as you know, like sports stockos. And I've been watching a lot of stuff about that at the moment. And there's seasons when they go hard, and there's seasons for taking breaks. There's times when you're in flow and times when you're not. And there's times for taking activity and time to let it go. And I realize that I want to be in the arena as an investor, and I love investing. And I'm going to do it in a very different way moving forward, which is more in alignment with that. I don't care about being the rich 80-year-old dude worth 10 million bucks. I care about being here right now and fully locked in, and then moving on to the next thing and being present. And yeah, I'm just grateful that there's people that are so clever that are putting out these ideas that are just, they're finally sinking in.
It is a tricky thing to deal with as well, like, because that keeping up with the Joneses is real, and you know you're always seeing somebody doing better, and like there's this idea that like the people that you follow on social media are always doing sort of 20 to sort of 100% better than you are, and so you're never really following people that are doing things that are worse than you. You're always better, so you just get this like
There's no one
false.
moving or surfing worse or
No,
traveling
it's
worse
all
or businessing
aspirational,
worse.
right?
Yeah.
And we're very blessed that we get to talk to some of the most amazing, influential, successful people that are doing so much better than us in different areas of life. And you can kind of get caught up with that. But so, you're 40 now, you've been doing this arguably for 20 years. Like obviously you haven't
Learning about it.
exactly, talking to different people, starting to lay the foundations. Knowing what you know now, talking to myself or your clients, what do you now do physically and mentally to try and just like focus on your own path and not necessarily worry about all of the noise and the keeping up with the Joneses and all these people that are doing better?
The first thing was when I got really anxious a bunch of years ago is I just stopped doing social.
Yeah.
So I don't have Joneses now because I don't know what anyone's fucking doing, which sucks because I miss time with my friends. Like I miss seeing what people are doing.
Everyone's running the Souther to surf, by the way.
Yeah, or I see that on the weekend, and some of them did it really fast. Like
So many. My mate Jesse Askew, he ran that with an average pace of 3 minutes and 25 seconds.
that is so fast.
I was like, man, that's a sprint for 12Ks. You
Yeah.
go. You should see him at the moment. Looks jacked
As well, run and lift club.
Yeah.
Big in this right where we grew up right now.
It is. Anyways, just a joke.
But I unplugged from that part of my life. Another, like I'll talk about two parts. So there's the mental and there's the physical. Something that when I was really anxious, and I still suffer bouts of anxiety. And I just wanted people to know, like, there's so much help for that as well. Like as a man or as a woman, I went to psychologists on and off for like 6 years, maybe 7. I actually was on some medication for about 2 years as well, just an extremely low dose anti-anxiety thing, because I just couldn't get my space in my brain, and I've just actually come off them, and I'm so grateful that I have, but I know how helpful they were for me. And just part of what I did at that point was setting boundaries. I don't take my phone home from work. I don't take my laptop home. On my personal phone, I don't have any social, any alerts at all, which is annoying for everyone that knows me because they can't contact me. I leave my personal phone in the car at night. I I'm OCD on this stuff because I need to protect my inner world and my space. And that's only maybe because of what we do. Like, I could talk to 40 people in a day sometimes.
And what we've seen, our dad suffered from anxiety pretty severely and used different coping mechanisms to get through it as a, you know,
80s.
overactive 80s dad. And so obviously seeing that and going, okay, well, we don't want to end up in the same situation. Like, how can we take control and try and figure out a way? And that's obviously another anxious thing, right? It's like, oh, control, control, control.
Control, control, control. But some of these controls for me have changed my life for the better.
In the
Like,
best way.
I just went over to NZ for 10 days. I didn't take my work, anything, and I didn't take my phone. And we were selling our home, and the agent ended up getting onto my wife, and he's like, I've got an offer for you. I've been trying to get on the bed for 3 days. And she's like, he doesn't take his phone when we go away. And the dude was rattled. Like, it actually rattles people when you're like, I don't have work emails on my personal phone. It's like, why the fuck would you have work emails on a personal phone? But
That is so contradictive. Like, everyone has work emails on their
that's what
personal
I'm
phone.
saying. And I'm like, Sam, maybe
It's
you
like-
should edit that, but it's going to stay in this.
It's like when, before the mobile phone existed, and the internet, every single person left their work at work. And every single person went home to their family to have dinner and sit down at the table and communicate with one another. But like nowadays, it's like people will do that, but then they'll jump back into work at the late hours of the night
Warren Buffett
and worry
doesn't
about why
have
they
a
can't sleep.
Warren Buffett doesn't have a computer. I mean, you can do it.
He is old, but he's super old.
He's also super rich. But yeah, I suppose getting to some of the other stuff that I do. So my nature's discipline, whether it's investing, whether it's family, whether it's setting work boundaries, whether it's work or whether it's training. So I wake up in the mornings somewhere between 5:30 and 6. This is really selfish as a dad, and a lot of parents are not going to vibe with this. I definitely couldn't do this when my kids were super little. This is my kids are all older now. They don't want to hang out with me all morning and all arvo. They actually just need more downtime than I do. And because they're learning all day, they're training all day, they're doing stuff every arvo. But I start every morning. For me, I'm a spiritual guy. So for me, prayer, what prayer looks like for me is just being grateful for my life. Like, thank you for just waking up. And the best thing I heard recently is like, what if tomorrow you only woke up with the things that you said thank you for today? I'm like, so I'm just, thanks to my family, like, thanks to my friends, thank you for this. I'm just sitting there for 10 minutes going, that's all it is for me. Or I'm scared about this, can you please take it away? You know what I mean? Like, because I'm not worthy, I can't do this on my own anymore. And I know that's not everyone's cup of tea, and I know people follow us for property and for business stuff and for ideas, but that's been a hole that I had in myself for a lot of my life, and I feel full now. I'm not saying anyone should do anything, I'm just saying it's helped me. Then I go into breath work. I do either breathing with Sandy, the box breathing for 10 minutes, like the SAS one, or sometimes Wim Hof if I'm feeling like whipping myself, because he's such a legend, it's so hardcore.
He is.
I then do some basic mobility movements to just get my blood flowing, feeling good. I jump in the ice bath when I'm not sick, and I was pretty sick a few weeks ago, so I haven't been doing that too much. And then I've got a pretty structured, like, we've got a full gym at the office now, which is so sick. And so I'll do my training, I'll do my running, I'll do my surfing.
We'll have to get you to do a morning routine video like every other influencer online these days.
Influencer. It's just I'm an idiot. I don't know what I'm.
No, it's an amazing start to the day. Like, you've been doing this for years as well. It's beautiful to see.
And I'm going to keep chatting, and then I'm going to ask you some stuff, because I know I've been on a 10-minute roll here. I'm sorry for everyone. I also am really focused at this stage of the cycle on health and my values, and that's off the back of Phil's advice. Like, it is getting more chaotic and more boom and busty and more excited and fearful. And to do that, I'm regulating my internal environment more, just to protect my energy space. So, time with family and friends, focusing on meaningful work, more holidays more often. I read a great book called Rest. I actually had to Google how to slow down and rest when I got surgery, and it was going to take 9 months to like get back. And it talked about 8 things, and one of them was the benefit of a 3-day holiday lasts in your nervous system for up to 6 weeks. That's the science of it.
Wow.
And a longer holiday can like have a 12-week benefit in your nervous system. So I'm taking a lot more mini breaks, setting those clear boundaries with phones, emails, when I'm on, when I'm off. Something I struggle at, and that's why I'm so disciplined with it, because I could just work 20 hours a day and still think that was a meaningful life,
Mm.
and then completely lose my family, my health, and everything else. So
Got to be cautious.
it's one of the ways that I get attacked and miss my life.
Yeah.
And then just coming at it with like, this is just history.
Yeah.
It's happened for hundreds of years. It's actually, there's books on this stuff in France 700 years ago, like ideas
Yeah.
about these cycles. And so this too shall pass. It's just one of those things that's going to come and go. No matter how much prep I do, no matter how much freaking out I do about it,
No matter
it's
how much you
coming.
try and control it, you can't.
No idea about the global
But you
economic
can
system.
control the things that you do to not get as affected by it. Like, I love the stoic approach to like leaning into what you can control and letting go of the things that you can't control. And it's like, you know, as different of an idea as, you know, praying and meditation and a gratitude practice might be, these things have been done for thousands and thousands of years, and they work. Like, they just work. And it's like, most of the time we get judged for that is from people who don't do it.
Yeah.
And then you get praise by the people that do it, because they're like, I can relate. I do it too, and it works. It helps.
I'm just doing it to not tilt off the planet, bro, because I could do that.
Yeah.
Like,
Yeah.
I'm like, I wish I could say that, like, I'm like always been on the straight path and always been filled with light, always filled with positivity, but I'm not. I'm doing these things to remain above the line. And, you know, that's one thing before I get into some of the things that you'll talk about.
Yeah, we're going down the path, the rabbit hole again.
The stoic stuff that you did in the last couple of years is actually super inspiring and crazy. And obviously Marcus Aurelius and some of those guys are some of the most inspiring humans in history.
Right.
For the pressure that they went through in their day-to-day life to maintain moderateness. So what did you do there, and how did it help?
I started a journaling practice a while ago, and I've lost it over the last sort of 6 months because I've got a kid, and there's more important things. And same thing, like, I used to do these things to avoid falling into bad habits and not doing the right things for myself. So it's like, I knew if I was constantly checking in with myself, I wasn't going to fall down, like fall off the track. So, but now I've got a kid, it's like, I've got so much meaning and purpose, and all I want to be doing is spending every waking moment with him, and like, that just solves everything. I don't need the journaling at this stage or at this point in my life, because
staying in the pocket.
it's everything. So I've found that I don't need it as much. But before and leading up to becoming a parent, I'm very grateful that I did that, to just recognize that, like, you know, just leaning into the present moment, leaning into the things that you can control, and literally letting go of the things that you can't. And I'm a human, like, there's still certain things that my OCD nature wants to control and gets frustrated with when other people don't do things the way that I would prefer it to be done. And I love what Alex Hormozy says about this, and he's like, I'm just doing things a way that other people may not prefer, or that person's just doing something the way that I would not prefer. And it's just a kinder approach to it.
I like that. I've never heard that.
But it was, yeah, journaling. So I would have like a notebook in my car, a notebook in my bedside table, and then I had like a daily stoic journal that I got from Ryan Holiday that's just really, really cool. And then my mother-in-law actually bought me like the coolest journaling book that I've ever received, and she found it at an op shop in Sydney.
Sick.
So sick. And like, every single morning, same as you, like, you know, very disciplined morning routine. Now it's different to what it was. Now it's better than what it was. But it was, you know, waking up and doing the prayer or the meditation or the gratitude, doing a bit of journaling, doing the breath work, doing the mobility, getting into the cold shower. Now it's getting up, making myself a nice herbal cup of tea. I just have like a lemon and ginger tea. Taking my son for a walk around the local park. We do sort of 2 laps. It's about a 2K little lap, and we talk, we look at the birds, we watch the sunrise.
He sees all the things that you didn't even notice, and he's like,
yeah, pointing at things, chatting. We talk to the neighbours in the local area, take my dog, we have a play in the park, and then me and my wife have got like an agreement where like from 6 a.m. to 6:30, she gets her time. If she wants to have a sleep in, she gets one. If she wants to do some Pilates, she does it. If she wants to do a training session, she does it. If she just wants to have a cup of coffee and scroll on Instagram, she does it. Her choice, her time. She does what she
and
wants.
then you and me get the other 23 hours.
And then I get from 6:30 to 6 o'clock at night. No, but I normally get from 6:30 to 7, and that's where I come back and I'll do my breathing.
Cool.
I'll do my mobility, which at the moment it's pretty quick. It's like a light stretch, 20 push-ups, 20 sit-ups, 10 pull-ups, 10 squats, and then jumping in the cold plunge and suffering for 2 minutes.
Love that.
So yeah, I've got a really disciplined morning routine, and you know, I used to journal every single night, but now I'm just so gassed by the end of the night. Like I used to have real bad sleeping issues, insomnia, just from too much stress, imposter syndrome, ruminating, just anxiety.
What's ruminating then?
Just
thinking.
overthinking the same thoughts over and over and over again.
Yeah.
So I used to need this full routine, but now I'm a parent. You always said it's just like,
Just become a dad
just
if you want to
become a
sleep.
dad if you want to sleep.
But you're always sleep deprived.
But I still do I normally do like about 5 minutes of just like foam rolling or laying on a ball, and that becomes like meditation once again before I go to bed. And then
Love that.
you know, I'm out by like 8:30 every night these days, like out at up at about 5:30, 6 o'clock as well, and asleep at 8:30, 9 o'clock every single night. And I'm in a bit of a sweet spot there. So like, I do feel as though those things are super important. And when I stop doing them, I absolutely notice that like I might start drinking more alcohol, eating more bad food, not training as much, not getting up as early, not surfing as much, you know, all of the things that I value and love doing stop happening when I stop doing the daily disciplines.
That's so interesting to hear. Yeah, I feel exactly the same way. I just like being in tune with myself. And it's like my psychologist, Zach, and I used to talk about this a lot. He's like, everyone has a pendulum. And he's like, your pendulum swings a lot looser than a lot of other people.
You just got a longer string.
Yeah, it's a longer string, maybe. And but he's like, we just want it to not. It's never going to settle for you know. I was just born with heaps of energy. That's how it is.
And as you said, it can be a superpower.
But you know, settle. Or you know, he talked about another concept, which is like we all have our holes that we fall into every now and then. Whether you deal with anxiety, depression, or just you've got an overactive mind,
ADHD or something like that,
or just you're a human being alive in this century where there's just all of this stuff going on, to be like 1,000 things instead of just like, you know, a dude or a woman.
I always laugh. It's like, you know, how long has it been since you sat on the toilet without your phone? Like when you go to the doctors, you know, what are you doing when you're sitting in the room?
Do you know
we used to have these periods of stillness, and they're little periods, but they're periods of stillness where you would do nothing, like even going to and from work on the train, like, or on the bus back in the day, or in the car. It's like music or nothing. But nowadays it's like podcasts, you know, audio books, this, that, the other. There's so much going on. There's no stillness, and we need to get back to finding that stillness.
I love that. Like I'm going to a chiro at the moment, and when I go to these things, I don't take my phone in unless it's during work hours and I'm still working. And I'm sitting there like just like with my eyes shut, and I know I'm tripping the fuck out of people, or I'm just like looking at nothing, and I know people are just rattled. They're like, it's this like, what, he's not on the phone type vibe.
Yeah.
What's going on with this guy? Like, he's an absolute weirdo.
It's become weird to not be on your phone. Anyways.
You
Getting back to this, yeah.
you wrote down in terms of some of the more like structural things you're doing in your life, offloading some assets and maybe holding high quality assets as well as paying off some debt. Like what's your sort of like plan running into this thing over the next 18 months look like?
Yeah, so fortunately, I found this cycle prior to beginning my investment journey. So I knew that we're coming up to an incredible run in the Brisbane and Sunshine Coast property market. So I went really heavy into investing. But as a first time investor, second time investor, third time investor, my budgets weren't great. So I was forced to buy, you know,
What you could afford.
what I could afford, let's just say that. And so now I'm looking at like, offloading some of the assets that I feel as though I can increase the quality of. So, you know, getting out of certain areas and then maybe investing it into better assets. So I from sort of 2018 to 2021, I bought 4 properties. I then subdivided one of those properties,
Sheesh.
renovated another. I sold one in the 23-24 financial year. I've just sold half of the duplex. Then I'm going to sell the other half of the duplex at the end of next year as we get closer to the very peak of the cycle. And then I've been investing in crypto for the last sort of 4 years now. And, I'm going to get rid of all of that and liquidate all of those crypto coins. And I'm with Host Plus Super, and I've got mine in the highest, and my wife's in the highest risk at the moment because I know everything's going off its head. So it's like happy to be high risk. But what I'll do at some point next year is, look at same thing, setting up a self-managed super fund, getting that into cash, getting ready to be able to put it into a property. So I'm just gearing myself up and my strategy, and that's one thing that's there is like sticking to my strategy. My strategy was to ride this second half of the cycle up to get myself into an incredible financial position so that I can really begin my investment journey in the new cycle, knowing that I've got 14 years of growth where properties on average in Australia have gone up by at least 120% during that 14-year period. And stocks have also gone up by at least 250% in that 14 years. So buying at the very true bottom in the right markets, the right assets at the right time with a heavy 14-year investment journey. And like, I'm a massive planner. I'm the youngest of 4 siblings. I'm very observant. I've always had this unique ability. It's my superpower to learn through observation. So it's also coincided really well where I had my first baby at 20 in 2024. We hope to have our second one at some point in 2026. And then in these years where I've got an infant or a toddler, where I just want to be super focused and present, it is in this time where we're going to be at the end of cycle recession. So when 2030 swings around, they'll be a little bit older. So right now it's all about just like reducing my debts, increasing my cash position, holding on to the highest quality assets. So my home on 1,000 square meter block that's a subdivision site on the Sunshine Coast, less than 2 Ks from the beach or less than 3 Ks from the beach. I think it's 2.4. And then the other one is in North Brisbane, 600 square meters, less than 2 Ks from the beach. Beautiful property, knocked down, but it will have subdivision potential at some point in the future. So I'm keeping those quality ones, but then just stacking cash, enjoying these early years of being a dad, same as you, spending as much time with them as I possibly can, sticking to my 4-day work week, taking 4 to 6 weeks holidays every single year to spend time with them. And then knowing that when I get to sort of 2030, or be at the beginning of a new cycle, we'll have the new world order according to Ray Dalio, but I'll know what that is and I'll know how to capitalize off that. And then I'm like, okay, from 2030 to 2045, it's 15 years where my kids are going to be away for 4 to 5 days per week at daycare or school. So at that stage of my life, yes, I want to take off time during the school holidays to spend with them, but I'm going to work harder and invest like there's no tomorrow.
Love that.
So it's all a part of my strategy. It's all a part of the plan that I set out to achieve. And when I said earlier, is like taking my own advice and sticking to my own strategy. This is thoughtful. This isn't something that I've just picked out of the air. Like, this is something that I think about, unfortunately, daily. But it's working better than I expected. And if I continued doing what's got me to where I am and leaning on my team of advisors, leaning on my network, leaning on my support teams to actually, make the right decisions and capitalize. So it's been a really thoughtful strategy that I've implemented and perfectly executed, which is nice for a success story, obviously. But, hopefully other people can, take some of that advice as well and be like, well, if that, kid from the Sutherland Shire in Sydney can do it, then I can do it too.
100%. And, I don't normally like to talk about what we do as a business, but I think sometimes it's important because we don't talk about it. I think that's the most important and first step that you and I do with people. Now, we're definitely not financial advisors or accountants. All we do is share ideas based on history for real estate, which is the thing that we're obsessed about, around going from where you are today to a financially free position with a strategy or an idea over a 15-year period, taking into account cycles, taking into account where every single major market in Australia is at and every suburb within those markets are, and then making the best possible decision we can at that time. And I think I didn't have these things when I started out as an investor 15, 16 years ago, but you did. You had a knowledge of history, of core logic, of Phil Anderson's work, of Akil's work. You'd seen what had worked and failed for me. You'd seen what had worked and failed for the 500 people we'd bought before you started and the 600 we bought since for them. And why I think that's so important as a success story is you don't have to do what I did. You don't have to make every single mistake in the book and over leverage and over freak out and buy the wrong assets just because you don't have a knowledge of this stuff. You can, like what you've done and what Crystal's done and what Hayden in our team's done as people that have worked with us from the very start of their journeys to now, is exponentially improve the quality of your team, exponentially improve the quality of every asset you buy, absolutely without a doubt nail the timing and the market, but taking that longer term approach and get the right things in place at the right time at the right cycles, as opposed to what I probably would do if I was just starting out now. Perth looks good because it's done 20% a year for the last 4 years in a row, and it's rushing ahead compared to every other market in Australia right now. Well, that's the shiny thing. I'll just follow everyone over there, and miss out on like a Melbourne that's basically at the bottom of an 8-year low right now. Even though we're at the later stages of the cycle, Melbourne is like silver. Like crypto and gold have gone off their head, and for some reason, silver's sitting at 200% below where it would generally be by this stage of a cycle. I'm not saying go buy silver. I don't know anything about it, but there are incredible opportunities if you know the long-term history and then can overlay the context of what's going on right now. And I was always worried about this stage of the cycle as to what we would do as a business. People are like, well, why are you still buying? And that was the question that you and I talked about for years and years and years. And my approach was, if I can't see value in the market, then we will stop buying. And that is still my approach. Like if Melbourne goes up 80% in the next 2 years, I hope it does, but it's not going to, then all of the juice has probably been squeezed and we're going to have to wait a little while. But I didn't expect it to go from Sydney and Melbourne to then Melbourne going flat to then Gold Coast, Sunshine Coast, Brisbane, then to Perth, then Adelaide, then to Darwin, and then back to Melbourne. Like I didn't realize how much as investors we follow each other into what's winning and completely write off markets that are phenomenal over time. And so now we've been like gifted with this opportunity where historically speaking, Melbourne is 60 to 65% below Sydney. But I know for a fact there's markets we're buying within 30 Ks of the city that are
More than that.
I would say 80% below what they would be worth in Sydney for the same thing right now. Like it is phenomenal, but looking at 400 suburbs in Melbourne, it's not phenomenal everywhere. There's probably 12 that we love.
The unfortunate reality that most investors face is the short-term mindset, and that they're looking for those short-term wins. Oh, I want to buy my property now and I need to see 10 or 20% growth within the next year or two in order to go and buy my second investment property. And they're thinking so short-term. that they're going to miss out on opportunities and they're going to buy assets in the wrong market that, yes, may do really well over the next couple of years, but then could fall out the arse and then sit flat for an extended period of time. So history does have a funny way of repeating itself. And, whilst we don't have a crystal ball, we have no idea what's coming next. The only thing that we can do to make the most educated decision is study the information that we have, study the history of all of this stuff. And then the last thing that I wrote about how I'm preparing for this period of time is I just hope history repeats. That's all I can do. If history repeats, property values should drop on average between sort of 8 to 12% in Australia.
So I can handle that, right?
I
Because
can
I've
handle
seen
that.
it 3 times in 10 years already.
But there will be certain properties in certain areas that will drop further than that, and that may present an opportunity. And stocks should drop between sort of 40 to 60%. And I'm not a stock market investor, but I'm a value investor. And I'll definitely pay for advice from somebody with a lot more experience than me in trading the stock market so I can capitalize when that time does come.
It's really that simple. And, at the end of the day, don't do anything is another option. Like, don't do anything for a period of time until all of this passes. That's completely cool too. Like, that's what I did in COVID with stocks.
Just don't wait too long.
That's what I've done with gold. That's what I did with purse. Like, I just didn't do anything. I just observed it and went, oh shit, that looks amazing now. With retrospect, it's super easy to look back, but there is nothing anyone needs to do. And I'd really highly recommend that if you're over leveraged right now, if you don't have a great understanding of this stuff, then a really, really good option is to firstly get your head around it, and then secondly, maybe just do nothing for a while. Like, there's absolutely people that book strategy sessions with us, and I'm like, dude, I'm so grateful to meet you, or you and your partner or your wife, and I just really don't think there's anything we can do to help right now, because if I was in your position, I wouldn't. But go talk to this financial advisor, this accountant, your own team as well, who'll have conversations with you for free to just sanity check that. And some of those people will do nothing. Others, like me, I was a very, very, very high risk investor when I started out because I didn't know anything about this stuff. Now, I'm a very active investor that's extremely low risk.
And the other thing is you got a lot more to lose now
I've got a
compared
family.
to when you first started.
I don't care about losing money at all. Like, I've lost so much money on a property I sold last year. I took a 300K bath.
Yeah.
Like, I don't mind losing money. What I will not lose now is time away from my family as a 40-year-old with kids that are growing up. I won't lose sleep at night stressing about things that I can read a book about. I will not lose the present moment anymore because I spent 15 years of my life so distracted
Trying to
by
control things.
anxiety and control and fear. And it is a trap. It is a trap. Like, no matter how much you plan for what's coming, no matter how much you read about what's happened, no matter how many 12-month, 5-year, 10-year plans we put in place, I can guarantee that your world will look completely different 5 years from now. And if you're getting great advice and working with great people, you should be 10 times better off in 5 years than you think you can be.
100%.
You said something that was really interesting to me. Between 2018 and 2021, you bought your 4 joints. I know at the start of that, you were earning 50K a year for the first 2, because like, you were basically doing an apprenticeship in Pumped.
Fortunately, it was low interest rates, so that absolutely helped. I think I was on like a 3% rate when I first bought those properties, so my serviceability was a lot stronger.
Yeah.
But that was just after the Royal Banking Commission as well, so it was
Borrow
like
money.
you needed bigger deposits, and there wasn't these 2% or 5% deposits at that point in time.
We didn't help. Like, you didn't get, hey man, here's like 50K from me. Like, you busted your ass off to get yourself in that position. The accumulation phase doesn't have to be as long as people think it's going to be, regardless of your situation. You just had a very particular plan. You sacrificed a lot for a small window so that you can have a lot more choices now. I know in this GFC, you're talking about maybe taking 3 months, 6 months, a year to go spend time with your family. And at that point, I'll give you the same thing that you gave me, which is that opportunity to just love that and do that. Like, you stepped in when I was like, man, I want to go do this with my family. It's like, there'll come a point where you might only want to work school hours. You might want to take all of the school holidays off. And I think if we think about what understanding this cycle is about and preparing for it, it's really about a values conversation. What
Mm-hmm.
type of life do I want? What type of choices do I want? And it's not this abstract idea of getting really wealthy at 60 or 80 and then giving something to your kids that don't even need it at that point. It's about quality of life today, quality of choices today. Because you busted your ass, because you saved all that money, because you invested that money, because you took that risk, now you can do whatever you want.
And it's a worthy pursuit. You know, it may not work out the way that you initially planned, but trying to design your life in a way that does allow you to live a values-based life, that does allow you to, you know, have your cake and eat it too, is a worthy pursuit. And even if it doesn't work out, or if you cop a few knocks, which everyone does, like
100% you're going to cop them.
there's some knocks that I haven't shared and won't share on the podcast, you know, with people, because these are the scars that I've dealt with. And it's like there's always going to be certain things that happen that knock you off your path. But, you know, a lot of the time, if you're living mindfully, if you're doing all of these daily disciplines, then you course correct really quickly and you get back on path and keep heading in the right direction. But ignorance is not bliss. Like living life and and just letting it happen at you rather than letting it happen for you is not conducive to a happy life. So you do have to be thoughtful, and sometimes you do have to plan for the future in order to make sure that your immediate next step is the right one. Where so many people just sort of hope that somebody does come to them and gift everything, and it's like, no, like the reason you and I talk about this so frequently is because if you want to become an exceptional person, if you want to achieve an above average life, and you know, I hate to sound like such an arrogant prick just saying that sort of stuff. It feels bad coming out of me, but what I'm trying to say is like, you know, being mindful about these things and actually planning and surrounding yourself with an incredible team of advisors and taking educated action when you can, like all of these things are necessary on that journey to self-actualization and living your true, like realizing your true potential.
You know, I truly believe in my soul that two things really. One, my value and your value and anybody's value listening to this has nothing to do with what you do. It has a lot to do with how you do it,
How you do it.
but it has nothing to do with how much you're earning. Money is purely an exchange in society and a value system, and it actually makes me sad, like how much we overvalue money and how much I did. Like I truly did worship like chasing this fairy dust and money for so long. What I will say is a worthy pursuit though is like character,
Mhm.
is planning for your future, is setting up your kids, is living a life of like that is joyful, that is light, that is positive, that is you can think about other people, you can help other people. You're not living like I did for so many years, which is just on autopilot, in a fight, freaking out and or running away. And I think the pursuit of financial freedom started out to me because I wanted choices, and then it was just a lot of hard work and a lot of scarring, and now it is just about service. It's like I honestly I'm so grateful for what's happened, and I wouldn't change it. Like I'm literally about to buy my 20th property in 15 years and I've sold most of them. We've bought $500 million worth of property for other people, and the 2 to 3 people we work with every week are the biggest legends in the world. But I don't attach any of this to who I am anymore. And financially free, non-financially free, you can have a freedom mindset. I think working towards it
Mm.
is just as powerful as achieving it. And the achievement actually has nothing to do with the money. It has everything to do with spending more time with the people you care about, doing the things that you enjoy, volunteering, serving, pulling everyone up around you. And for some reason, the more I used to talk about what I did with the people that are close to me, the less impact it had. The more you do it, the more impact it actually has. Like just being a walking example of like these things can work out, because there's been enough time from the little dickhead I was at 15, like 15 years ago, going, this is how it's going to look. to the results coming through. Like the results are going to come through so much slower than most people expect. I was in the surf with one of our really good friends, Josh, who's actually starting with our business in the next week. And he said to me, like, could you see it? And I'm like, 100% I could see it. Like, how do you achieve it without seeing it first? Like, how do you buy a property without the desire to buy one, the education to buy one, the team to buy one, and then going and doing it? How do you get healthy without like doing the right stuff? It's just, I saw it, and I wish I could just, grab my previous self and go, dude, like relax. Like so much of what I did was so joyful, but so much of what I did was so unnecessary. And I want to help every single person get financially free and buy the sickest properties in Australia. Don't get me wrong. That's just the personal ego thing. Like I just want to smash the market average. That's always been our goal in the business. And it's a long-term thing, but if people make money in the first few years, fuck yeah.
Exactly.
Like let's get real about it. But
Results matter.
I want to help people do it in a fun way. I want to help them enjoy the journey. I want the journey to not be as stressful. I want them to be like bringing everyone along with them. Like I want to speak to my previous self in a way that's like, dude, you fully got this. Instead of stressing out about it for 15 years, here's a one-page plan. Let's just obsess about that one thing. And then once we've nailed that, we'll do that and educate people on the journey so that they've got the tools to fish and do it themselves. Like,
That's it.
I love this game, and property is just the vehicle to like all of it.
Exactly. I think everyone's going to live a lot longer than they think, and you've got way more time than you believe. And if it does take a little bit longer, that's okay. But just getting stuck into something, and I kind of disagree in a sense that like if you're able to rewind the clock 15 years and just be like, hey man, relax, like it's all going to work out. It may not have if you didn't go through that journey as well.
It wouldn't have.
So it's like sometimes you need to, give a bit of blood, sweat and tears and sacrifice a bit in order to get there. And like, then it feels a lot better as well because you're like, nobody gave this to me. I talked to one of our awesome clients, Chris, recently, and he was just telling me about his journey as a young pup in Sydney and in Western Sydney with, a really, really tough upbringing to where he is now. And he's like, I can't talk about this stuff with anyone, but that's why I love you and Benny, because obviously, you guys have come from a similar background and obviously got to where you are right now. And I'm like, would you change it? And he's like, absolutely not. It's like the suffering that I had to endure and the journey of my life and how it's unfolded in hindsight has been perfect, and I wouldn't trade it for anything else. So it's like, if you are in those really dark years at the moment,
good, like fully embrace it.
that's it. Exactly.
Like, because the wound or the cut is where the light enters. Like the harder it is for me, I know this is because there's people suffering right now listening to this, and I feel for them because I've suffered really hard, but it is the start of everything amazing. And if you can slowly get your physical health, slowly get your relationships back on track, and slowly get your finances back on track, I promise you 5, 10, 15 years from now, those three things, and then hopefully finding some meaning either through work or through investing, like life can be pretty sweet down the line once you pop out the other side. Hey,
Up 100%.
I've loved this, bro.
Another
I've
good one.
really, really, really loved
Another
doing
good
this
one.
with you.
We're back.
Yeah. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just wanted to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.